All right, good morning, traders, and welcome to the opening bell. Today is Tuesday, July 7th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's a quiet morning. We were seeing that the US dollar and most of the dollar crosses are still holding really tight opening ranges. The dollar-yen breakout that did kind of push to test the highs again yesterday has come back. We're testing initial support, so we're checking that out right now. I just shot a piece for dollar CAD, which continues to contract within a 2-week range now, just below resistance, poised for a breakout. Oil prices, a little bit of a recovery on the back of some reports that we've got Iranian fire taking or commercial traffic taking some Iranian fire. So a little bit of a swell there, but nothing to write home about. We'll take a look at all the US dollar crosses, gold, oil, and Bitcoin. Any other questions or trade setups? As always, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone in the room. Ashish, Dan, Kevin's here. Latanya, have a terrific Tuesday. Same to you, Latanya. Maury's here. Mesfin, Seth, great to see everyone this morning. So here's the DXY, super tight. The pullback from resistance is at support. That's where we ended up Friday. That's where we are right now. The level is 100 spot 65 into 77, guys. The objective March high, 618 extension off the low. Uptrend support is there off the May advance. That's basically governing the objective monthly range lows thus far. So the weekly opening range is taking shape right above support. Initial resistance, you got the 38.2 retracement of the broader 2025 decline, and the objective monthly open. That's 101.14, 101.22. That's resistance. Support 100 spot 64 and 77. That's support. The focus over the next 24, 48 hours is on a breakout of this objective zone for guidance. Now, a topside breach above the objective monthly open looks for a retest of key resistance, which remains 177 into 101.92. That's the September 2024 high and the high day close. A really nice pivot in price all throughout last year. Major pivot, uptrend resistance. That's the breakout we need to really unleash the next major leg of the advance. So you could literally replay yesterday's webinar. The levels remain exactly the same. Dollar index setting up the weekly range right above confluent uptrend support. Here's euro. Not quite as clean, unfortunately, but not too far off. 1482, 1492. That's the resistance zone we've been talking about. The 618 off the high, the November low day close, the objective swing low later that month. Both of those converge on basic channel resistance. So you're not setting up the weekly or monthly range right above or right below a level, but you're not too far off. That's key resistance, really near term, just a very short term interpretation. I added this on in the webinar yesterday, just off the lows, has the upper parallel there over the next few days. Again, highlighting support near term at the 618 of just this near term rally. That's 1382. You need ultimately a break below 1355 on a close basis to validate resumption of the April downtrend. You're looking for 1275. So still a little bit, the risk rather of the recovery to push into resistance here. At the end of the day, not the cleanest setup. Not the cleanest setup. I'm actually putting together something for euro later, but still having to work on these levels a little bit. So we'll see if we come up with anything a little bit clearer at the moment. Here is sterling. The rally pushing through, okay, and stretching into the 200-day moving average yesterday. Remember, that was the first level we were talking about. Comes in around 33.90 at the moment. Just higher is key resistance, and this is bearish invalidation. So remember, the entire stretch we've seen off the June low, that nearly 2% rally, okay, we've literally had, this is the first down day. We're literally snapping a 1, 2, 3, 4, 5, 6, 7, 8-day rally. Okay. Momentum, not even an overbought condition yet. So it tells you something about the structured nature of the advance, right? And we're now at initial resistance. Look, this is all still within the confines of the decline from the May highs. And if sterling is heading higher on this stretch, any pullbacks from here would need to hold support at 33, 33.26. The next key level up again is 34.16 to 34.74. That's the objective monthly, yearly open. That's the objective 618 of that May decline. That's the February low day close, a very clear pivot in price. So that's the game plan for sterling. You're heading into initial resistance right here. The median's line right here could get some kickback. The weekly opening range low comes in right above support. So objectively, that's near-term bullish invalidation. Topside breach above that 200 days, what's needed to mark resumption, and then 34.60 is on the way up. So sterling testing resistance here today. It's been a very structured ascent of 9 days. Make sure I got that count right. Stick with me one sec. I'm a stickler for consecutive candle count. Yes, 8 days. So today would have been the 9th. 8 days up. All right. So it's not unheard of. We've seen it happen a couple of times in history. You had a couple of days. Here's a 7-day advance that you made back there on the stretch in April. That exhausted for a few days, actually a couple of weeks before it actually resumed again. You had another 6-day advance back here in November, saw a slight interruption, pause for the broader rally before resumption. So it's nothing that is cause for concern per se, but the advance is now testing initial hurdle resistance. So if we're going to head higher, losses would need to be limited to 33. No limit, no event risk out of sterling per se this week. But the big event risk, which we didn't talk about in the last two crosses, are still going to be the FOMC minutes. We'll talk about it again tomorrow, guys. But I really do think the markets are paying closer and closer attention. The more just throughout the course of the week, the more research I've read and commentary, it seems like a lot of people are putting a lot more weight on these minutes just because of that change in regime and because of the market shift we saw not only in the dot plots but in that interest in that inflation forecast. It's very, very concerning, right? So 3.6% on core, 3.3 on headline for 2026 is not not heading in the right direction. So markets are really interested to see what the discussions were with regards to the inflationary forecasting, with regards to that shift in the interest rate dot plot, and with regards to the labor markets. Not so much because there's a red flag in the labor markets, but on the back of that non-farm payroll report we got on Friday, which was weaker than expected. And we did see unemployment contract, which was a positive development. But remember, it was accompanied with a contraction in labor force participation. Oftentimes, that can give you artificial downward pressure on the unemployment rate. So it's going to be interesting to see what their commentary was on the labor market specifically. We already know that inflation is sort of a problem. So that comes out tomorrow in the afternoon. We'll see what those minutes concern. That's going to be the major sort of marquee event risk for all the dollar crosses this week. Specifically, as we head later into the week on Friday, we get CAD employment, which will be a player for the Canadian dollar setup. But do keep that in mind. That comes out tomorrow. Here's Aussie. So we rebounded off downtrend support. We marked an outside day reversal off downtrend support. Right after that day, we said, let's look for a break of that range. If that range for that candle breaks higher, the threat is that we're going to see a little bit larger recovery within the downtrend. That range broke right here on Friday to the upside. Here's the continuation. We're sliding through that 2024 swing high, 69.42. That was initial resistance yesterday. The median line is there. Still looking for a near-term reaction here. If we're heading higher on this stretch, this is really tight and it's only Tuesday. But the monthly open comes in right at 69.18. Okay, that's below the objective weekly range low that we set, basically yesterday's swing low. So real near-term support if this breakout is legit. But the threat is on this move that you potentially see a test of 70, which is basic resistance and bearish invalidation, into 70.22. That's going to be the 618 retracement off the rally from March. Going to be the 38.2 retracement of the decline off the May high. It's the 100% extension of that same decline Both of those levels converge on former uptrend support turned resistance and current operative downtrend resistance. So either way you slice it, that's the critical choke point for the bears on Aussie dollar. Initially, right now, we're looking to see how we resolve today around 69.42. The threat is you closed above it yesterday, that you get continued dribble higher here. We'll want to see a little bit more of a definitive dollar price action as well. And tomorrow's FOMC minutes might do it. Listen, initial support at the monthly open, like I said, 69.17, 69.18. Key support is still 68.80 into 68.68. That's the objective 200-day moving average and the 618 extension. Remember, this is a long-dated extension just from the highs that we made of this year, right on the downside. It's what caught the lows. That's key support. 200-day moving average is there as well. That's the break you need to mark downtrend resumption in Aussie dollar. So jury's still out, potential for a little bit of a swell continuing here, but you're still within the confines of the downtrend. Look for initial support right now at 69.42 if this is going to hold, if this break is legit. Key resistance still 70 to 70.22. So CAD, I just shot a piece on this for StoneX TV. It's a very well-defined, clear-cut range breakout. It doesn't get much more defined than this. So I found a level that we teetered out at. Remember, we were kind of looking at no man's land here. We had slope resistance 42.35 into 42.39. It's the objective March lows from last year, both the opening range low on March 6th specifically, and then the late in the month we tested it again. That pivot break led to the inevitable decline towards the yearly low last year. So that level is 42.39 to 42.35 into 42.39. Try saying that 3 times fast. And that's the objective monthly range high. So far, it's last month's close high. That's resistance. Okay. The weekly opening range is taking shape just below. For the last 2 weeks, we've held just below that zone. Here's the weekly chart. You could see, well, this is the third candle, but last 2 weeks, we've been holding right below resistance, right above support, former resistance, 41.37, 41.50. Okay, swing lows from back here in February, swing highs from back here in November, the 50% retracement of that yearly decline. That's the weekly chart. Drill down, daily chart. Here's your weekly and monthly opening range taking shape right below resistance. Momentum is not broken back from overbought yet, but that certainly would be a tell if it did come back from overbought, that you'd see a little bit more of an exhaustive move. Near-term support, or I guess I should say on the daily chart, bullish inval is 41.09. That's the November high day close. We tested it later that month. We broke through it after a single test here on the 17th. The acceleration continued. It converges on basic uptrend support over the next few days. That's 41.09. Drill down even deeper. Here's a 4-hour chart. Same exact slope we've been tracking. I haven't changed anything. This slope is mirroring or mimicking this basic gradient off the low. We added that pitchfork back in May, all throughout June. Support, resistance, break of the median line, acceleration, failed attempt at the upper parallel. There's resistance, 42.39, 42.35. We've been holding below it since June 24th. Okay. Initial support at 41.45. That's just the range lows for the last 2 weeks. Converges on the 25% parallel today. Bullish invalidation at 41.09. Initial focus is for a breakout of this range right here, 41.45, 42.39. If dollar CAD is heading higher on this stretch, if the May uptrend, it actually stretches back all the way to that May low. If that uptrend is going to remain intact, losses would need to be limited to 41.09. You need a confirmed daily close northbound of 42.39 to mark resumption. Now, the only issue with the long side here is even if it does break, the top side levels are kind of stacked not too far off. 42.92 is the 618 retracement. Then you got the 1618 off the low at 43.35. Both have the potential of to spark a larger inflection, a larger kickback, potential exhaustion. So a little bit precarious once you break the highs, although that's going to be the confirmation of the resumption of the uptrend, but do keep those levels in mind. The monthly open comes in right here, 41.97, 41.45 initial support, bullish invalidation, 41.09. Clean cut break. Now, you don't have any major data on tap here. We have the FOMC minutes tomorrow, and then Friday comes the fireworks with those Canada employment figures. We are expecting unemployment to hold 6.6%. The read is expected to come in at 10,000 jobs. Last month's gangbusters, 87,000 read was certainly something that offered some motion there in dollar CAD as well. So we'll be looking to see this on Friday. This comes after the minutes on Wednesday. So still some event risk on tap and probable catalysts for this dollar CAD range breakout over the next few days. Questions on dollar CAD? One of my favorite setups still, very clean level. So here's dollar yen. That rally off support punched through 61.69 and 61.95 yesterday. And then we closed just a hair above it. Okay, so here's what it looks like on the daily chart. So we're now right back at that key pivot, 69 to 61.95. It's a 30 pip zone. It caught resistance in early June. We sat there all throughout June before the final breakout there, and then we washed right back below it. So we're straddling it right now, but I'm looking for support here today. At the end of the day, you're still fighting the potential of an intervention. The trade still technically remains constructive because you're still in that May uptrend. This is the same pitchfork we've been tracking, guys, for multiple months now. But there is still some signs of topside exhaustion waning. Yesterday, we looked at the sentiment. Let me refresh this for you and just make sure we got the latest read. It was at 18% as far as net long exposure on dollar yen. Right now, it's at 16%. So you're starting to get a little bit more of a build on the short side again. Remember, that was super, super extreme near the highs where you had like a 90-10, or it was at one point, it was a 92.8% long. You're starting to see that continue to wane here. So look, from a technical standpoint, like I said, we're still in the broader ascending structure, but that lower high right ahead of the monthly open doesn't bode well per se for immediate resumption. So I'm still thinking you get some back and fill, you get some kind of range bound action here for a little bit before we finally make the next definitive move. Maybe even a consolidation if you get a series of lower highs and higher lows. But at the end of the day, initial resistance still remains right at the objective monthly open. That's 62.58. A topside break there. And if we close above the monthly open, you'd basically be looking for the resumptive move. 63.33, 64 on the upside. Now, even until yesterday, bullish invalidation at 60.36, 60.73 made sense. For the last 2 weeks, that's been bullish invalidation. Last week on the breakdown there, that's exactly where this thing caught the low and rebounded. But now, you'd have to be below the median. You'd have to be below the parallel for that to even register. So remember, slope is subjective. Lateral levels are objective. So I still have to keep bullish invalidation here. But guys, at the end of the day, from a tactical standpoint, if we break this slope on a 4-hour close basis from a chart standpoint, you'd basically be threatening a break of multi-month uptrend support. So just keep that in mind. Initial support here is 61.69. If it's going to hold, and this is just a breakthrough resistance, test it as former support and move on, that's the level that would ideally hold. If we break below that, anything below that slope basically looks for a retest of the monthly range low, last week's low, key support, former resistance, 60.36, 60.73. You guys know how I feel about dollar yen. Not my favorite setup, but that's where we are in the grand scheme of things there. By the way, here's the weekly chart just to keep things in perspective. Objective 2024 high at 61.95. Yeah, that never actually closed on a breakout on a weekly close basis still, right? So still think the long side might be a little vulnerable near term. That's dollar yen. Anyone interested in dollar Swiss? I don't know. I've been getting questions on and off about it. It's a very clean technical play. That rebound last week was like clockwork, 79.95, 80.09. The low literally registered at 80.10. That's a major pivot in price. It was a 38.2 of the drop, but it's also the April high day close. You saw the breakout last month really accelerate, take us into that fresh yearly high. Key support. Slope support is above that right now. The weekly opening range is taking shape above that right now. Key resistance remains well defined. So this is my apprehension on this setup. Even if we break the top side, even if we break initial resistance at 80.68, you got the monthly open right there and key resistance into 81, 81.24. So we love the pullback off this level. That was support. Do you get the resumptive move right off the bat? We'll have to see how the dollar kind of performs. And we have some event risk on tap. But all things held constant, the key range break would be 79.95 into 80 as support, or a breach above 81 to 81.25. So basically this 100 pip range is going to be absolutely critical in determining dollar Swiss price action heading deeper into July trade. Questions on Swissy? Latanya says, Aussie CAD, please. Thank you. Yeah, let's take a look at Aussie CAD. That's an interesting set. Aussie CAD. Yeah, talk about range-bound price action, Latanya. That's as range-bound as it gets. You're talking about a multi-month range dating back to the May calendar month. There it is. You're still trading within the May opening range. You've never broken. So here's the grand scheme of the daily chart. You're coming off of uptrend resistance. Let me take a look at the weekly for you real quick. See if I have anything on that. Ooh, getting messy. Okay, well, drop the 88.6 to clean this up. That's the 618 off of the 2012 high. Okay. Yeah, this is a really tricky one. I'm not let me put it this way. It's a technical threat from the broader scheme of things because of where you are in trend. So hold on. Is there a modification we can make to this slope? Let me just see this real quick. No. I wish I had a better interpretation for you. The slope is kind of falling apart here, so I don't want to stress this, but the lateral levels are pretty clean. So that's 618 off that 2012 high gives you 97.57. That's actually been support ever since the breakout that you made back here in April. So here's the April breakout. Ever since, every pullback has found support on a weekly standpoint, at least, ahead of that 97.57 level. And that is basically your swing lows for last month as well. So that's a key level of support. The 2021 high week closed at 98.19, starting to lose some efficacy. Usually if the weekly chart looks like this, Latanya, the daily, I don't drill down much deeper. But if we do, here's the weekly, here's the daily chart. And you can see a multi-week, multi-month range still intact. You can even say it's probably a potential near-term consolidation range. You're right slap in the middle of that range. What do you want to do with that? What do you want to do with that? Momentum? I mean, it's technically constructive, but not by much. Weak candidate trade. Weak candidate trade. I'll tell you why 98.22 still comes up as an important level. The 2021 high week close, what we were looking on the weekly chart, 98.19. 98.22 is the objective monthly open now. 98.16 is the 88.6. That's from the decline that you saw off the highs they made back here in 2021. And then 98.22 is the high week close for 2021. So at the end of the day, this is still a decent pivot point. Near-term support, I'd be looking there. Key support, still 97.63 right here. Now, resistance, I'd amend that. Get rid of 99.28. The high day close looks rock solid to me, and it is. That's the high day close for the year. They registered in May. It was rock solid resistance last month. Tested it twice last month. Would necessitate a break above the upper parallel here, this consolidation slope. This is a 3-point touch, so it's a confirmed slope. That's resistance. This is the focus breakout I'd be looking for Aussie CAD. On the fly analysis for you, Latanya. Nothing I've been tracking. It says I'll pass. Thank you. I turned you off to it. Well, I mean, listen, for range bound traders, this is like their cup of tea. But even the range bound trade at this point, because of where Aussie is and where the potential for that CAD breakout is, I'd be looking at those two separately before trying to make any major assumptions on Aussie CAD. The larger range that you've been in from May, that's essentially the breakout that you need here. Interesting set, but nothing pressing on the immediate front. Hope that offers some color for you, Latanya. That's on Aussie CAD. All right, real quick look just at the gold trade. I'm putting together a piece right now for FOREX.com. It'll be out at 11:30, I think. Here's what it looks like. So we talked about 40.74 into 40.98. And that pivot zone was critical. It was key support back in June. We pivoted below it. It was resistance. Again, into the open this month, we broke above it. Now the median line is right there as well, providing an added layer of where we would look to see potential inflection. So I'm looking for support there now. If we drill down into the 4-hour chart, oh, and by the way, we've been talking about the divergence into the low, right? So that's manifesting finally. We're above the median line. Momentum hasn't broken 50 yet, but that's something I would want to see. Now, drill down even deeper. Here's a potential slope off the low. Again, too early to rely on, but it highlights the same levels we've been looking at. So 40.74, 40.98 converges on uptrend support. That's near-term bullish inval. Near-term resistance is at 42.14. That's just a 618 for the near-term decline off that late June high, but it also converges on the median line here as well. That's this median line. Oh, I'm sorry. I think my slopes are off here. Are they off? Looks a little bit different here. It looks like we're coming off the slope parallel. It's actually the same slope. Must be the scaling. In any event, you've got that 75% parallel there for that slope we just added, right? And that converges on the 618. So it adds an extra layer. If we breach above that, it would further add confirmation for a potential low being in place. But the actual breakout would be the yearly open, the 38.2 of the decline from that high in April. That's 43.04 into 43.19. So the levels become a little bit clearer on the gold trade, which has been quite messy as of late. But initial support, 40.74, 40.98. We'd want to see support there if there is some sort of low materializing. Initial resistance, 42.14. You would need a breach above 43.19 to validate a much more significant lows in place, and the potential for a larger trend reversal is underway. So the level's starting to become a little bit clearer. We still need the momentum to kind of give us a kick in one direction or the other. Maybe FOMC does it tomorrow. We'll take a look at it again tomorrow morning, but the levels are starting to become a little bit clearer. Here's oil. Again, reports of some of those commercial traffic getting some missile hits from Iran, giving this thing a little bit of a pause and just kind of reminding markets that things are not quite settled completely yet. At the end of the day, monthly open resistance is being tested right now as we speak. Resistance technical comes in at 71.90. That's the April 2024 low day close, and last year's objective yearly open has been a very nice pivot in price, converges on the 75% parallel. Bearish invalidation. If we make it through the 200-day moving average, through that 100% extension, 73.84, 74.16. If we break through this zone, it would be threatening a larger sort of rebound. It would be threatening a breakout of that near-term downtrend we've been tracking just off the highs from May. So quite problematic if that were to break. Nothing, trading's an if-then proposition. We haven't gotten to that point yet, but those are the risks if we were to surmount a larger recovery. Near term, just looks like we're bobbling here along the median line. Look for initial resistance near 71.90. Last but not least, a quick look at Bitcoin. Still a little bit of a bobble here after that bounce off key support, 57,885, 58,725. Trend support there, 618 retracement there. August 2024 low week close. We got that reversal candle last week with the rebound. Here's what it looks like on the daily. You had a 1, 2, 3, 4, 5, 6-day consecutive rally off key support. It's encouraging for the bears, or for the bulls rather. Yesterday's decline, we highlighted 61,573 as initial support. That held. That held. In fact, we closed a positive candle yesterday. Add to that, that we closed above the February lows, which was 62,795. That's telling you something, guys. We want to be a little bit more cautious here. The divergence we've been highlighting into that low, again, finally materializing, are the bulls starting to step in with a little bit more fervor here? It's too early to tell. Watch the weekly close. We'll look at this throughout the week. But again, same levels exist. Watch today's close with regards to 62,795. Still, break below 61,573 would open up the potential for a larger setback again and a retest of those support levels. But as we've been saying since the beginning of the year, either one of these 2 points has the potential to find the low, charge a larger sort of bull run, or at least limit the losses over the next couple of weeks. So we're still looking to see if we get whether that 57,885 was the low, or whether we still get that last draw to complete 2 equal legs towards 52,000. Jury's still out. But at least in the near term, downside seems to be limited. And that kind of makes sense with us coming off of downtrend support. Let's see if the bulls have any momentum here. All right. 1 minute overtime, but that's everything I got on my front. If you guys have any other questions or trade setups, do feel free to throw them on the message board. Otherwise, sit tight, leave some powder dry as we head into those FOMC minutes tomorrow. As I said, it's typically not a major market mover, but in the current market environment and with the change in the regime at the central bank, traders are going to be really combing through that discussion to see where the committee stands, whether there's a greater dissension amongst them, or whether there is a little bit more of a consensus view that we're probably going to have to sit and wait here for a while, if not hike, to really tame some of these inflationary pressures. We'll keep you updated, as always, on MB Forex. See you tomorrow morning, same time, same channel for another episode of The Opening Bell. Best of luck trading, guys, and I'll see you then. God bless.